Afternoon, how are you all doing? Sorry, I was in the middle of reading something. How are you all doing? Afternoon, Crum, Alex, Martin, XR Update.news, Fletch, Amy, Evans, Burke, how are we doing? So we had some news this afternoon. Decent moves on lots of stuff. We've got a big move on the Swiss franc and a big move on the Canadian dollar as well as the US. I've just this New Zealand dollar. I had an aggressive position I put on the New Zealand dollar this morning. If you were here this morning, I've just taken that off on a trailer because this is what I was looking for a potential reaction at. 150 ADR US dollar Swiss, which was basically a position of that gap fill from yesterday's move from the US dollar, and it's done it. So I've stopped out. I trailed the bottom position and the aggressive position just to get out of some exposure on New Zealand dollar, basically. So banked 1 and a bit percent. That is back down to 2% now. So just a bit of drawdown control being done. Obviously, the drawdown control, I'm not going to do any drawdown control on the above positions because this is kind of negating the previous drawdown control done. So big moves there. So if you look at the ADRs, well, just quickly look at the news. The unemployment claims came out at 261. Forecast 236. So they were forecasting basically for unemployment claims to remain as they are based on the previous unemployment figures coming down. Unemployment claims have gone up, which means unemployment really has gone up. So that is bad US dollar. And obviously we've had a negative reaction to the US. So if you look through the US pairs, not on the indices, obviously everything crossed with the Canadian dollar, the US dollar has risen, and everything US dollar, etc., has dropped, apart from the US dollar CAD, because that's kind of gone sideways because these two move together. So if you look at things, other things, US dollar rated, everything's coming down. So Euro US dollar up, Pound US dollar up, Aussie dollar, US dollar up. So negative news there for the US. Not a massive market reaction to it. The Swiss stole the show before the news came out. So Jordan came out. This is why it's important to listen to Jordan. It doesn't matter whether it's classed as yellow, orange, or whatever. When Jordan speaks, the market listens because it's very, very tight-lipped to the Swiss National Bank about what it's doing. So when something is said from the Swiss National Bank, it's like, what are we doing? And basically, it's like the rate is relatively low. Not a good idea to wait for inflation, basically. So what he's basically saying is inflation is potentially going up. It's not a good idea to wait for inflation to go up before we put our interest rates up, i.e. probably going to put our interest rates up so that inflation doesn't rise. If you look at the fundamentals on it for the Swiss franc, they're only running at 2%. We're all targeting 2%. They're at 2%. Yeah. And they're saying we're going to get on top of it. So basically, the Swiss, they're notorious for not letting stuff go wrong. It doesn't go wrong, basically. So we're all trying to get to 2%. Theirs has gone up to 2%. And they're saying, screw this, we're putting our inflation up so that we don't go any higher. So the Swiss National Bank said that. Obviously, what happens with the Swiss franc? Boom. Everything came down against the Swissies. So they've rallied the Swiss franc, basically. So everything's coming down against the Swiss. Good old me. I've got no Swiss exposure on whatsoever. So I haven't taken advantage of any of this because I had no Swiss exposure. So 150 ADRs. When things like this happen, look at the US dollar Swiss. We looked at this morning, actually, as an example of what happens when the Swiss change their rates and they don't tell you about it. Yeah. That. So if I was you, well, I'm not, but I'm not getting involved in trying to mean revert these until we get a little bit more information from the SNB. So the idea here being is they're going to increase their interest rates. Therefore, the Swiss franc will power up, which is great news if you've got euro longs on, because it will drag the euro with it, not the euro Swiss, the other euro pairs, as you can see. So the euro will rally along with the Swiss franc movement. So good news on that side of things. US dollar, undecided as to what the market's going to make of that. It's a bit difficult to tell when the Swiss francs had so much piled into it, but the US dollar definitely came down off the back of the news, but not too aggressively. So we've got 3 minutes to the open. If you look at the ADRs, all the ADRs are Swiss franc related. CAD Swiss 125, Euro Swiss 150, your US dollar Swiss at 150, New Zealand Swiss, they're all the same. Yeah, so up to you if you want to try and mean revert these. We are putting in very large propulsion gaps. So this is either a knee-jerk reaction, and don't forget, all that has been said is it's not a good idea to wait to put interest rates up. So obviously, as everybody would read into that, is a case of we're not going to wait to put interest rates up. Therefore, we are needing to buy the Swiss franc because they're putting their interest rates up. So we'll see. It could be that they come out and say, no. We just said it's not a good idea. We didn't say we're going to do it. And all of a sudden you get a V-shaped recovery. So keep your eyes peeled on the news. This could unravel straight away. It might not. Straight after that, so that was released at 1:23, 7 minutes before the US dollar jobless claims. So they don't do this by chance. This was released before the claims to get the money into the Swiss franc. So everybody's pulled out of the US into the Swiss, basically. So we may unravel these, we may not. So if you do want to take mean reversions on these Swissies, wait for the 5-minute reverse alerts. I think you'll find it very hard to get into these. No, actually, it's starting to slow down a bit. So the reverse alert is there. Propulsion targets to the upside. Obviously, you're going to get a 4-hour and an hour. You're going to get an hourly propulsion gap target going in here. So as soon as this hourly candle closes in 30 minutes, anywhere in here is target. Yeah, so just watch all these. The others we've had, market's about to open. 40 seconds. So the other one we've had is the New Zealand dollar CAD. That has also hit to the upside. That's come off ADR, so that's just pulled back a little bit, but it's pushing again. Apart from that, it's everything Swiss. Yeah. And New Zealand dollar, US dollar, sorry, as well. That came straight off. So New Zealand dollar, US dollar, and New Zealand dollar CAD, same thing. Basically, same trade, same kind of instrument. Right, so just going to watch the opens. The pre-markets, that's a biggie on the Dow. Just want to watch, just make sure that it executes correctly. A lot of volatility there. Wow, that was flicking around a lot before the open. All orders in. Good. Dow long. NASDAQ short. S&P not yet. I would quite like these to whipsaw today because I really want to test the aftermarket entries. This isn't me. This is the terminal freezing. S&P long. Right, okay. There we go. Right, so that's pulled back. Stopped out on the NASDAQ, flip long. Somebody sent me a really interesting research paper from Peak Capital on the opening range breakout strategy, because it's a well-known strategy. It's not my strategy, this opening range breakout. This is a well-known, cash balance is very well known in all trading circles. They've done an 8-year study on the ORB, the 5-minute ORB, which is what the opening range breakout EA is, the initial version. They've done an 8-year study on it with a slight variation on entry. And they've done a walk forward analysis on it, stopping out on the Dow, flip short. Jesus Christ, that's not even triggered. What the hell? Didn't even fill. Why are you not filling my order? I certainly shan't be trading this with Forex. That is criminal. See that? It was doing that, not filling the orders. This is a mess. I'm going to have to pick this apart in a minute because this market is all over the place today. So yeah, they've done an 8-year analysis on it using a 1% risk profile with end of day close, and the results are astounding, to say the least. Which is basically pretty much the same results as I've got, but they've got some variations on the strategy which I'm going to test, which look very, very good, like 1,600% returns. So I'm going to test all that. Right, so that's good actually, because we've got the loss today. That's good. Not good, obviously, but means I can test the re-entry breakouts. So huge whipsaw today. Huge whipsaw everywhere. The only thing that's got a chance of making money today is the S&P. That is still on the run long. But huge whipsaws on the NASDAQ, huge whipsaws on the Dow. And loads of slippage again. So losses should never exceed $500. So that's 500, 513, 500, 509, 569, and 641 on the Dow. Yeah, so, you know, this is stuff you don't see in backtesting. That extra extra $200. Yes, that's a $1,200 loss. Should have been a $1,000 loss. 20% variance. Yeah, you put 20% variance on your losses, all of a sudden you're not making profit. This is why I'm testing this, forward testing, to see if we can get fills on these orders, because it's very volatile when we're trying to get in. Which, coincidentally, the strategy that Peak Capital used for entry avoids that initial volatility, as does my initial 5-minute opening range breakout strategy. TP almost hit on the DAX and the S&P. Can't tell you whether it's hit or not because the market's frozen again. There we go, didn't hit. Wait for these candles to go in. 50 seconds. Afternoon, everybody else. Harris, Emac, Brian, Steve, John, Mumo. What are your coloured moving averages? 24 and 72 on the daily. All covered in the course. Day 4 indicators. That whipsaw. So the ORB was good on the Dow. Just took out the stops before it hit the TPs. Shame. Okay, so there's your 5-minute breaks. Stopped out on the S&P in profit. At least one of them stopped out in profit. No, it's not. Loss. 1 flat, 1 minus 78. So it's 2,700 down, 2.7. That, look at that. That's just... Never mind. So basically looking now for inside bar breaks. So S&P at the moment is an inside bar break. Although we have still got that stop, sell stop short on at the moment. However, if we get an inside bar, what will happen is, right, so this is a perfect test. This new logic, or rather the logic I undid yesterday that was wrong, which I discovered on the S&P as well. So what should happen now is if we get an inside bar here, which would be lovely because it will test in the next 3.5 minutes odd. What should happen is this should get cancelled off and then it should replace inside bar breakout pending orders. That's the logic. If that works, this is the exact test I wanted to happen today, so this will be great. Sorry if you're trading this live. I'm on the NASDAQ, so I'm in the same boat. I'm down 2 on the NASDAQ. But let me just watch this for the next 3 minutes, and then we'll have a look at the FX markets. Evening outro. Can you share that into the Telegram group? What? Crappy day today. Share what? What was I talking about? Oh, the research paper. Yeah. There you go. It's this, basically. I can't see where the high is on that Dow. Let's have a quick look. Pound CAD ADR. So the Dow is not an inside bar. That's just made a new high. That wouldn't have triggered you in an order, though. Ooh, that would have been very tight. It might have actually triggered you in an order. It's tight, that. Big range, though, today. Don't make a new high, S&P. You stay there. Please. NASDAQ's going. New highs on the NAS. One and a half minutes left on this candle. Right, come on. I just want this. I just want to watch this S&P. I just want to watch this execute. 50 seconds just to see if it works. This is the only time I can really live test this, unfortunately. So if this triggers correctly, I think that's all done. So I can get on with more back testing. I just need to check this. I have tested it in the back tester, but I want to see what it does live. That's the important thing. Don't freeze up on me now. Pretty big spread. Somebody was saying about not having a set file for the S&P 500. One of the other reasons it's not worth, well, not that it's not worth trading the S&P, but you see the S&P is obviously a lot less volatile than the NASDAQ and the Dow. The other reason it's not as good for the OLB strategy is the spread. Yeah, so you always get a really tight spread on the Dow. You get a very much tighter spread on the NASDAQ, and you get virtually no spread at all of the DAX. So that is number one. That is number two. That's number three. The S&P moves virtually the same. Why is this frozen up on me now? Just as I need to test this candle close. Right. There we go. So it did work. So cancelled off. Pendings, obviously, because the candle had already gone down, the order got placed afterwards, turned into a limit order, but it worked. The functionality's there, so that's good. Just check the logs. 1 sec. Delete pendings after IB. Delete pendings after IB. DAX. Okay. Cool. Okay, that works. Good. Right, so I'm just going to leave this to run. I'll come back to this a bit later and see what it's done. But basically, all three will now be monitoring for inside bar breaks to try and do loss recovery. So obviously this one has broken short already. but you've got in with a limit order. But it's in the right place, so that's fine. If it doesn't work and it obviously stops out, it would have done that if the market was connected when the candle closed. Right, Euro odd and pound CAD. Sorry, Euro CAD and pound CAD. Is this one disconnected now? I give up. I'm switching brokers. I've had enough. Robo Forex, you are utterly useless. I literally, I don't know what's happened. This seems to be connected to this Virgin thing. You know, my Virgin internet had all sorts of problems. Since then, Robo Forex's connection is awful. I'm wondering if it's something to do with my internet or something. But something's not right. Disconnection again. Back again. Weird. So pound CAD, Euro CAD, Euro US dollar. So pound CAD, we've got ADR on that one now. Euro CAD, ADR hit to the upside. Your reversal alert on the Euro CAD is fairly tight, so that's not too bad at all. Obviously, Euro, be careful. Swiss franc, if the Swiss franc is still rallying, the Euro will rally with it. Yeah, we don't know how far the Swiss franc's going to go. It can go for a lot of ADR and it can go for days. So just be careful with the Swissies. Aussie dollar CAD rallying to the upside. This is massive weakness on the Canadian dollar. Yeah, so CAD's falling out of bed. I would imagine the US dollar is also falling out of bed. The only way we can tell by really looking at Euro US dollar and pound US at the minute, because the Swiss franc is not a good read for US dollar strength. So yeah, everything moving fast at the moment. Aussie dollar's back at my aggressive drawdown control position. Big wick rejection there. This happened off the back of the news, the US dollar news. So we were pushing down very nicely. This looked like it was going well. Straight back up again. So lots of ADRs today to take your pick from. The Canadian ones, probably not too bad for mean reversions. Because we did have a Canadian interest rate rise yesterday that we weren't expecting. So these ones, I don't see a reason. So that propulsion gap's just filled. I don't see a reason why we shouldn't just fill these propulsion gaps, return to origin, and then continue for a new leg down. So things like Aussie dollar CAD as a short looks pretty good. So drop down M5, wait for the reversal, ideally tighter than that. But the Swiss franc ones, be careful. Just had a Swiss franc reversal there. Aussie dollar Swiss came straight off of ADR. Look, that didn't even trigger. Look, 45.0 off of 45. It has to go a 0.1 beyond ADR to trigger it. That is exactly ADR to the pip. Not even a pipette over. Look. But that has given a reverse alert. So potentially push back up on this one, but be careful of these Swissies. Thanks for the follow, Fields. Welcome aboard. So RSIs, we got 150 ADR just hit on CAD Swiss. So that's sitting in this propulsion gap now. Happens all the time. So there's your 38. So that is a pullback. That's profit take, 50% there, which is that second propulsion gap, which is 175 to 200 ADR. Last target will be somewhere around about 225 if it continues to push. Pound CAD 125 ADR. So I've got pound CAD long on at the minute. I just need to just putting a trailing stop on this, basically the distance of that candle. So just trailing 108 or 18 pips, basically. We're 125 ADR. This is yesterday's high, previous day's high. which we're tapping into. So we might find limit orders trigger here, and I've got a lot of profit on it. So I'm just putting a trailing stop on that one. This trade here that I've got running is basically this trade here. I didn't exit on my other account. So I went back into, well, not into a little bit of drawdown on it. It then pushed up and rallied yesterday. I didn't get it on, didn't get out before the drop. So I am getting out now. So it's this trade here, just a little bit more profit, basically. I haven't got profit targets on them, which is why that's not exited. Again, it's something I'm testing, which is working really well. Letting the EA get me in and not using half an ADR targets, just letting the EA get me in and then getting out at propulsion gaps. So again, it's something else I'm testing for a potential new EA to do with the propulsion gap targets. 125 ADR on Euro CAD. Canadian dollar's still in massive trouble, as you can see. So again, these are potential mean reversions, but obviously the Euro is running with the Swiss franc. So pound CAD probably better than Euro, but they're both bullish, pound and Euro. And now the CAD is potentially bullish on the interest rate rise as well. Very, very difficult to get any bias on anything at the moment because everything is, it's the same as it was before. If you look at the bias scorecard, virtually everything is range bound here. Look. Yeah, we've got a few bits and pieces which are buys and sells, but the vast majority of all instruments, there's no advantage from a fundamental perspective on anything at the moment. So we are expecting I'm literally going on interest rates at the moment. We should Aussie dollar Swiss, that's another ADR just hit. Big moves on these. Why Aussie New Zealand are you not doing what everything else is doing? I am fast becoming a can't be bothered with Aussie New Zealand anymore. This is a really good example today of how this thing stands like this when everything around it is moving, everything else around it is in chaos. This doesn't move because it's an Australasian pair crossed with an Australasian pair. The vast majority of FX movement happens in London and New York, and they're shut. This is why this thing is so frustrating. You get all this movement in the Swiss, the Euro, the US, the CAD, every other Aussie pair, because it's a cross with the CAD, the Swiss, the US, yeah, all moving. Aussie dollar yen, nothing. Aussie dollar New Zealand, nothing, because it's an Australasian pair against an Australasian pair. Drives you up the wall. But it is coming down. So this is New Zealand dollar weakness just when we don't need it. Look at that stop out. Bottom of that wick. Not my day. It's not my week. I'm having one of those weeks this week. Short on the S&P, running nicely. I've got to test that with that setting turned to through as well. Leave that for the minute. Yeah, so S&P breaking to the downside, straight back down into yesterday's low and previous day's lows here. Limits buying up. Target's a bit far away on this one. We'll see how that goes. Right, RSIs. Let me just catch up on the chat. There's not a lot of RSIs to look at today, so. Afternoon, everybody. I haven't said hello to. Seems Euro is powering up. Yeah, that's with the Swiss. What's the name of the presentation software you're using for this live stream? This is Streamlabs. I'm not using any presentation software. Just Streamlabs. There's only, as far as I'm aware, there's only two streaming software. Streamlabs and OBS. I use Streamlabs. I used to use OBS. That's what you mean. If you're talking about my pen, that is called Epic Pen. And it's just a pen tool. You can draw on your screen, basically. That's what that is, Epic Pen. That's what you mean, what I'm drawing with. That's Epic Pen. Aussie New Zealand is really annoying, yeah. Last Aussie New Zealand trade I was in, I stated I would never trade that pair anymore. Yeah, I'm beginning to agree with you, Brian. David, even. We'll see. If it lets me out in the next, if it lets me out this week, I will forgive it, because it has. If you know BTMM, Beat the Market Maker, Steve Mauro, in his work, basically, Steve Mauro's theory was the 3-day push, or rather the 3 ADR push. So Steve's theory, which I disproved many times, which is why I scrapped using it, was that you market pushes in 3 pushes. Yeah. So you get a push, accumulation, or flag, push, accumulation, or flag, push, accumulation, or flag, and then a pull. Yeah. So you go 3 cycles, 3 cycles. I've got millions of tests I've done where we don't do 3 cycles, we do 2, and then we do 4, and then we do 3, then we do 5, then we go back to 3 again. So trying to moving 3 cycles is difficult. First of all, because how do you measure a cycle? Some people might see that as the first push. Some people might see that as the first push. So who's right? It's subjective. Anything you see in any trading course that is subjective, trend lines, subjective, levels, support resistance, subjective. Pushes, when there's an accumulation, is that it or is that it? Subjective. You can't use it because your version of the strategy and my version of the strategy totally different. So this is a 6 ADR move. Yeah. Show me a push. Where is it? Doesn't work, does it? But the theorem was it moves roughly its average daily range on each push. So that is a way of kind of measuring it. So if that is the case, this is 2, 3 ADR pushes, because this is 6 ADR. And before you get a reversal, you often get an accumulation. So if this high holds, this is coming down at least 30 to 50% of that move, isn't it? So this is a 6 ADR squeeze, which is acceptable. I can live with a 6 ADR squeeze. It's the ones that go 10 plus that will just knock an entire month's profit out the window in one go. So I will forgive it if it comes down today or tomorrow. If it pushes up and takes that stop out, yes, I'm not going to trade it again. He says, like he never said he was going to trade gold again. Gold's gone mental, by the way, because obviously US dollars dropped. Oil, I forgot to mention yesterday, we had obviously oil inventories. I wasn't here because I had to go. Yes, I was. Tuesday, I had to go to the dentist. I was here. We forgot about oil yesterday, 3:30, the oil inventories, crude inventories. So I'm assuming they haven't moved to Thursday because of the bank holiday. Yeah, so yesterday was the crude. So if you look at oil yesterday, it got a little bit of a leg up before the crude inventories, and then the crude inventories came out and it basically just whipsawed and held where it was. Today, we've had a little bit of a rally and it's coming down on the US dollar because obviously oil is priced in US dollars. US dollars coming down, oil's coming down with it. So we're not getting anywhere on this one, unfortunately. I was just thinking about things I don't trade anymore. That's why it brought my attention. But we are looking like this is a leg up. So I would be looking for a trade up to ADR at some point and test that level. Where we go from there, I don't know. So it's going to be a tricky one, oil. I keep looking at it. I'm just trying to learn it, really. Learn its little intricacies, because I would like to trade it because it's got quite a small ADR. And when it does push beyond its ADR, it's actually quite quick and easy to make money out of. and it trends really nicely. So if you can get onto it, you can get onto it and stay on it, and it will go for days like this without virtually no pullback at all. Yeah, 3 day, we get 3 day runs, like Steve Mara said. So you can make a lot of money out of it, but I want to watch it every day and see what it does, kind of learn it a bit more. Gold paid the rent. Excellent. Brian, ABC pattern, Aussie, New Zealand, just did the whole alphabet and then some. Yeah. Yeah. An ABC to Z pattern. This thing's, I do not like this candle. We don't break that high. I think this was the start of the sell. Or it was the fastest profit take in history from that move. Yeah, if you look at this, it's a 50% retracement, basically, on yesterday's move. So it's a quick news profit take. 61.8. Pound US dollar, hit ADR hit to the upside. I was just going to say, US dollar yen looks like it's hit. It has now. This US dollar is coming down hard. Really didn't like that figure. We had positive unemployment figures. So not good. Potentially continuation short on this US dollar weakness that we've seen since the Japanese stepped in. So back down into these propulsion gaps. Right, ADRs, Aussie dollar yen. Sorry, let me just quickly check up on the ORBs. Okay, no inside bars yet, apart from that one. Right, so Aussie dollar yen. So all of these were lit up today on the 4 hours. There's lots of lit up in the 4 hours. We didn't have any hourlies this morning. So all these 4 hours, as you can see, are all coming out of extension now because they're all starting to turn around, apart from our friend, the Aussie New Zealand. So Aussie dollar yen, 4 hour RSI, extended to the upside. Got 2 shorts on this on the H1 mean reversion strategy. So that's holding at the moment as well. One entry there, one drawdown control done. So looking for a push back down, at least to test this high if it wants to rally upwards. But now the US dollar yen's coming down, there's less emphasis on the Japanese to pump the yen. So we really require some Australian dollar weakness on this. But nicely embedded on the 4 hour. So you'll be in this on the 4 hour already, but it is still extended. US dollar Swiss just hit RSI low. So we might have some, yeah, we've got some RSIs lit up there now. Aussie New Zealand, we know all about Aussie New Zealand. Extended embedded, has been on the 4 hour for 12 days now. 11 or 12 days. Doesn't matter, does it? Far too long. US dollar CAD. So this one, we had that rejection yesterday. It's very undecided as to what this thing wants to do at the moment. That was the entry on the hourly. Second entry there. Didn't manage to get a third because obviously that was just a spike. There was no reversal alert in there. Should have had one today. Oh, wow. No reversal alert today because that spike was the low and we haven't actually put in a new low. That will change when the market actually does some movement, but at the moment we've got no movement on it. So there's no additional entry on that. $34 is half an ADR. That's 46. See, that should really have been a manual entry there. Missed it. Might take one there. Just work this out 1 sec. 51. Yeah, that would have been perfect entry. That's the reversal there. I'm going to put a limit order on this. The manual take profit. So the average, if this gets triggered, the average will drop down. So if we push back up above average, that's going to TP. And then obviously I can manually close out the rest of these trades. Should really got a trade on there, but obviously that spike has meant that the last up candle before that low was made off the news is all the way up there. So the fact that it retraced all the way back inside itself and then just gone sideways means we haven't had a reverse alert, and we also haven't reset the reverse alert because we haven't gone anywhere. So can't actually get an entry on that. I might just move that down a little bit there. So just see if we form a little bit of a range down here before we go. If it goes, it goes. That's fine. My entry is only here. So if it does push up into there, that entry is going to go back into profit anyway. So yeah, sorry, US dollar CAD. That was a 4-hour RSI extension. The other option obviously is we may come down and test this monthly low, and then we've got the previous month's low here as well. So this is a really nice support zone here. And that is where we've kind of bounced yesterday. So it came down into this area and they bought it straight back up again. So if it doesn't break that low, this is possibly where we're going to break back up into this propulsion gap anyway. So that's the average. So if we get back up to there, I'm out anyway. So it doesn't really matter if I get that one on or not. US dollar Swiss is on the hourly RSI extension now. So be looking for a reversal alert on this. This is the weekly low from 2 weeks ago that's just been hit. No, sorry, that's last week's low. Straight through it. There's nothing really to stop us until we get back down to that previous low down there, which is 2 week low. And then we've got the 3 week low here. So this propulsion gap obviously has been put in by that news event. We'll be looking for that to be traded back up into at some point, but either they are going to stop here and reverse, so false breakout and then push back up into propulsion, or there's nothing really here to stop them. So between here and here, between here and here, there's not really anything in here that you would say is a really good support resistance level. Possibly there. They did retest that level there, so that might be an area. But 200 ADR, so we might get a bounce at 200. Either way, I'll be waiting on this one for a reversal alert. It's not quite extended enough yet, though. So if you want to take this on a 70 RSI extension on the hourly instead of a 75, that is a valid setup now. Drop down in 5. Just wait for that reversal alert. Get you in. Up into there. But just bear in mind what we've just had, yeah? So this is why it's important to understand correlation between currencies and fundamentals, yeah? So we've just had big negative news on the US dollar, yeah? Because the unemployment rate has gone up. We've just had big positive news on the Swiss franc, because Jordan has just said they're not going to wait for inflation to rise before they put interest rates up, hinting at an interest rate rise, which is bullish Swiss. So we have just had massive negative news on the US dollar and positive news on the Swiss franc. That's a double short on US dollar Swiss. So you're getting in the way of a steam train, which has just had 2 fundamental news events, which mean this should be dropping, which is why we get those 200, 300 ADR days. You get that perfect storm. Swiss franc power, US weakness. Bang. So when you're trying to get in the way of this, it will pause. Yeah. So in any rally, it will pause or potentially flag. And what you're doing on a flag is you're entering long, because a flag break will be a structure break. So you will get in long there as they start to break that flag back down for a second leg or third leg or whatever they need to do. So the more extended it gets, the more likely you're going to find the market will want to take profit on it sooner, because if you get a big move like this and then it starts to rally back up from 225, everybody will start to jump ship fast because you don't want to lose that profit you've just got. So you get that pullback, which will be usually a 38 to 50 move. So bang, bang, bang. That propulsion gap stays intact. This is where the sellers will add back in. So they'll move down, take profit, add. That's what the propulsion gaps do. They show you where the sellers are, so that if we push back into that area, those sellers that haven't exited will add on to their positions for the next leg down, which will be down to here, here, or potentially all the way down there. So just be careful trying to mean revert this Swiss franc at the minute. Euro, US dollar. That's pushing up, obviously, US dollar weakness. Highs of last week. That is the 2-week high. We've just plowed straight through. So 125 ADR would be a lovely short. US dollar Swiss, they go 175 now. Again, drop down M5. If we get up to this level here, which is the high, we've also got the previous monthly. That's the 2 month ago low. That level, which is not a really good support resistance, actually, if you look at it. Actually, no, it's not too bad. Let's scroll out a minute. CAD Swiss 175. Really wish I had some Swiss franc on. So it's this level here is what we're approaching. So this is last week's high, and that is at also 2 month low. So potentially you got 2 lots of limit orders. The higher time frame traders who are trading the weekly and monthly charts will be watching the monthly levels. They'll be adding to breakout shorts on those monthlies. Weekly traders will be watching the weekly levels. They'll be adding to the weekly highs and lows. So you've got 2 areas coming up, and you've got obviously the 24.72 area, where if we're going to continue on a leg down, you should really respect those areas as well. So looks good. However, euro, we're expecting some bullish movement off the back of interest rate rises. US dollar has just had a kick in the teeth. So difficult from a fundamental perspective at the moment to really draw any conclusion on what's going to go, because the US dollar is what we always want to keep an eye on. And at the moment, the Fed hasn't got a clue what it's doing. Every time it comes out and says we're not going to increase interest rates, 2 minutes later they come out and go maybe another 0.25%. So the market goes no. Oh, all right, okay, no. All right. So you just don't have a chance in picking a direction, which is why everything at the moment is range bound. Apart from the Aussies, which obviously are not paying any attention to anybody else. Right, so that's all the RSIs done. So there's quite a few there from this morning that have turned off. And there's a few opportunities to get in on these ADRs, but they are big moves on the Swiss franc. So keep an eye on the news just in case Jordan comes out and potentially, or anybody else comes out and reissues rate guidance on the Swiss franc. So you get Goldman Sachs or anybody else mentioning anything to do with potential Swiss increases or decreases or anything like that, we may well see a much bigger move, 300 ADRs and such. Okay, so additional entry long, there we go. So we got an inside break on the Dow. So double bottom, inside bar. It's a perfect double bottom. Inside bar break to the upside. And the tiny break-even stop basically on the S&P, and that has flipped long up there. So again, this is part of my testing, is the logic of this. So when this is something I've got to do in the back tester, but when we get these additional entries, is it better to remove the opposite order or leave the opposite order in place on that inside bar? Because one of two things tends to happen on these inside bar breaks. They either whipsaw, in which case then you don't want that one, you want to remove it, or it might take out the high and then go down. If you've removed that, you miss that move. Again, there is no real right or wrong. So in this case here, we got that inside bar. We broke to the downside, didn't get to our TP. We pulled back up. We broke even on it. Now we've flipped back to the upside. But that trigger was 5, 10, 15, 20, 25, 30 minutes ago. Is that still a valid order? I don't think it is. So I'm thinking maybe we need a filter to remove these after 10 minutes. If we haven't triggered it within 10 minutes, i.e. whipsawed and re-entered, remove. These are things I need to test. I need to spend time in the back test of testing these. The trouble is, and it sounds like I'm blowing my own trumpet. This isn't my strategy, but when you put this in the strategy tester, it's actually quite difficult to get it to this stage because it makes money most of the time. So trying to get conditions where it gets really bad is actually not very easy because the market doesn't spend much time being really bad like that. It breaks really quickly and makes cash. So it's really good to see it trading this live because I find it hard to find instances where it does this in a strategy tester because it just gets the breaks and it wins. I had a period, I think it was in this one. The DAX. Oh, Brian, are you in here? Yeah, I think you were. That's the backtest results of optimization on your set file on Euro US dollar. I couldn't make it work. It wasn't profitable. That was testing the 4-hour breakout. I was testing basically different trading stop levels. There wasn't one that made profit. So that didn't work. Not saying it won't work, but that set file you sent, I just optimized it for trading stop distance. And it didn't make money at all. So we'll need to retest that, I think. I don't know what the settings this has got, but look, see, that's what happens most of the time. Just hits target. And then you go on to the next day. Yeah, and it just hit target. Broke to the downside, hit target. Second entry, stop out. Third entry, stop out. Fourth, fifth entry, target, target. So trying to find a day when it, look, just target, target, or closed at end of day. Funnily enough, that functionality that I've got end of day close is exactly what this is using. If you look at the walk forward optimization, end of day close. End of day close is the most profitable. And their analysis has shown, funnily enough, that ADR percentage or stop loss of ATR, they use the 14, whereas I use the 10. But there's not a lot in it, to be honest. If you look at the 14 ADR and the 10 ADR on a chart, you'll find you're a couple of pips out. So using 5 to 10% of ADR as a stop instead of opposite side of range, and using EOD close or 10R close, you can see here, this is the most profitable batch. So anything above a 6R reward using a 5 to 10% ADR stop and no trailer, rather than using opposite end of range produces 1,600% return. Did I just share this in there? Hang on, let me just unshare that. But yeah, so I'm going to replicate this in the ORB EA V2 and test that. The other thing they're doing as well, which is different to me, I don't agree with their way of testing this. So what they're doing is they're using a 1% risk compounding approach. So obviously this turned a 25K account into 6.4 million in 8 years. I can get anything to turn that into that in 8 years if I compound. However, compounding in the real world doesn't always work that way. So the reason I have a $500 risk per entry, regardless of stop size, is that gives me a constant to work with. When you're using a variable and you're testing a system parameter permutation test with a variable, the variable has an impact on the system parameters. A constant doesn't. So using a fixed risk, either a fixed lot or a fixed monetary amount, is better than using a percentage risk, because you will always find, we were talking about the bell curve earlier this morning, you will always find elements in that bell curve that you can make massive amounts of money with, huge returns, assuming everything goes swimmingly. When things don't go swimmingly, percentage returns make you lose money faster, and then it becomes more difficult to recoup them, and that turns into a negative. So I'm going to redo their test, but using a constant rather than a variable, just to make sure. But you see, they're using the 14-day ATR or the 14-day ADR instead of the 10. But look at that profit curve. So the previous results are there, and then percentage return using ADR instead of opposite stop does that. Massive difference. So I should be testing all of this. It's not going to take much to tweak the EA to achieve those results. So, but I'm going to test it on the DAX, because the DAX has got more stable data for me because I'm in Europe, and the NASDAQ has got time variances. But if I can produce anything like that on the DAX, it will roll over to the NASDAQ as well. So we'll see. So we have also got an inside bar break that's just triggered on the NASDAQ. So this is working absolutely perfectly. Look. So there's your inside bar. It's triggered long. Left the sell side in place. So this is what I was talking about with this inside bar break. The whole idea being, when you get an inside bar, we expect it to do one or two things: break, or give another inside bar, which is called a 2IB, which is a symmetrical triangle contraction, and then that breaks. So if it hasn't broken and stopped out within that candle or that candle, we're in an accumulation. So the breakout has failed. Therefore, I think we should cancel that off. My thoughts on it. Because if this thing now sits here like this for 20 minutes, I don't want to go short. I'm thinking twice about whether I actually want to keep that long on. It's a 50-50 shot either way, isn't it? But the breakout has failed. So what we're thinking potentially we might have is a rotation. We don't want to trade in a rotation. So do I want to take that short? But then you'll get instances where it does that. It's TP, returns 3.5 grand, and you'll be crying because you removed them and didn't leave them in place. There is no right or wrong, is there? As we know. But anyway, just hit 3R on the first 4-hour break on the EU, Brian. Yeah, see, today, So it's that candle. Whoa. Yeah, that's not, for me, that's nowhere near a 3R. You got down 1.5R on that candle. Oh, you're running on the 1 hour. Okay. So that's not the 4-hour break, is it? First 4-hour break, EU running on the 1 hour. 1, 2, 3, 4. So you're taking a break of that candle, are you? As a break of that range, you would have gone short, stopped out, gone long, stopped out, gone short. 1.5R. Am I missing something here? Oh, that's Euro odd. Sorry. Right, start again. Okay, yeah, nice. This is a news day, though. Swiss franc, US dollar. So, yeah, very nice. We are. I mean, it will have winning days, obviously, but I think with the 4-hour, because of ADR and the way that price moves within ADR, I just think the 4-hour time frame is going to be quite difficult. You're better off, I think, trading the second 4-hour candle, which is the Asian high-low, just playing the London breakout. But I have tried that and it didn't work. But then again, I didn't try it too hard because I was following the index path. So, can you share this copy in chat? It's in the Telegram group, Harris. No, I can't. Because it's in Telegram. Go to Telegram if you want it. It doesn't trigger until the 4-hour candle closes. Right. So that's everything I've got for you there. Aussie New Zealand's still not going anywhere. It's thinking, still thinking. Don't like that rejection. So yeah, that's all I've got for you today. Nothing much else to look at. So there's lots of setups here, but I'd be careful. The EA will take them if it can. So it will be taking a CAD Swiss long because it's running on every pair on the VPS. So we'll see how these ADRs all play out. We'll have a look at them tomorrow. They may well just all mean revert, but just think, you know, when you look at these moves, when we get these big propulsion candles in on news, yeah. Yeah. That's on the cards. So it may not come back and test it. It may just come down, flag, break, and then you're starting off to the downside. But as long as you have market structure, you'll have an exit. So if you got in on that flag break, you would have scaled in and exited and won. Yeah. So it's only if it goes parabolic in the other direction. So like that big move there, you can see that trade there, one entry, in, out, done. But it was a 38 retracement on a continuation leg up. So just always, when you get big moves like this and you know that it's going to retrace, just that 38 level is key. Because if you are not going to reverse it completely or put in a market structure pullback, you will flag. And the flag will be somewhere between 23 to 38. So when you're getting into your trades, if you see big price action moving out of this level, it means that the guys that started this sell are adding to their sell. It's not going to go well. It means that this is, yeah, we want to go short. Bad US figures, bad because the Canadian is linked to the US. Good news on the Swiss franc. It might be introducing interest rates. Yeah, so this is a massive double bear move short, same as the US dollar Swiss is. So if you get into it and you manage to get a reversal alert on the 5-minute chart there, and you see it pushing up, and you put your little fib on and go, okay, we got the reversal alert there at the 23. So you get to there, you just get a reversal alert, you enter long, that is a flag break short. Or it might get up to the 20, onto the 38. If it gets to there, you fancy, if you don't like it and you're worried about it, put a stop on it. Worst case scenario, you're going to get stopped out. You probably will. But if it puts in a V-shaped recovery, you're going to make a load of money. Just use your head with these. Yeah, you're taking a trade against a fundamental move against these this currency pair. So be careful. They're really, really tempting when you get these, because we know the odds are 6% of it going further. Statistically, 6% of the time it goes beyond there. The rest of the time, 94% of the time, it either pulls back or accumulates, one or the other. Yeah. So it's really tempting when you get these, because the odds really are in your favor. And we see these V-shaped recoveries all the time, all the time. But when we don't see the V-shaped recoveries, we end up getting multi-day pushes against us. So just bear in mind, again, what we were talking about this morning, 3 stages. Yeah, you might get one, you might need a second and a third before you get out. It might just turn into an absolutely normal position trade. It might turn into Aussie New Zealand. Don't know. So just exposure, exposure, exposure. Currently using it to get in while I'm away from the chart. I managed the trade manually from there. Was hoping to get it fully automated through backtest. Yeah, it looks good. It needs more. It needs some work. I did very limited backtesting with it. I literally, all I tested was that one entry criteria of that one time frame with four. I've just changed that now. 4 different trailers. And 1.5 R and 10 R. So yeah, the thing about this type of strategy, you look at this on the euro US dollar. So you get a break long, failure, break short, massive profit. Really wide range. You might want to put a range filter on this, basically to filter out any Asian movement. That might be something that's worth doing. That one, break short, fail, break long, fail. That one there, break long, fail, break short. Probably 3 or 4 are. That one there, break short, win. That one there, obviously today, we know, massive win. So it looks good when you visually backtest a week or two. But as we know, backtesting a week, a month, a quarter, nothing, doesn't make any difference. I can get amazing results with the 3-month backtest. Try backtesting over 10 years. That's what's important, isn't it? Can we sustain this on all market conditions, bear, volatile, etc., etc.? That's the other thing about the PDF as well. We were talking about this morning about bull, calm, bear, volatile markets and things. They did volatility testing as well. So they tested in bull, in market, what's it called? Regime. Yeah, so they were testing different market regimes from 2016 to 23, which was particularly difficult because we had COVID in there. We had a huge drop in the S&P. We've had this massive bear run that we've experienced for the last 12 months since COVID. And we've had that huge recovery out of COVID, which was completely wrong because businesses were losing money left, right, and center. The only thing that was working was the tech. And obviously that was the tech bubble, which has now popped, which is why we're seeing the S&P and everything collapsing. So they tested this ORB strategy through all market regimes, and it stood up through all market regimes. You can see it on there. Oh, wait. Yeah, so these are the bear markets. These grey lines. Yeah. So performance during bear market. Well, performance during bear market. Yeah. So it works in a bull market and a bull calm, which is where we spend 90% of our time. And it works in bear volatile too. Because you're trading M5 chart, it doesn't matter what the market regime is. As long as the market's moving, it's possible to make money out of it on the 5-minute chart because you're trading algorithmic chop. So interesting tests. Everything that I spoke about this morning, this is why the guy sent it to me. Everything I spoke about this morning in the live room about backtesting, we were talking about backtesting in detail. This company, who obviously produced solid testing like this, forward testing, out of sample testing, etc., walk forward testing, everything I was talking about, they do all of it. And it's all very promising. So I really want to redo the EA just to retest that entry method because it looks brilliant, but it would be very, very simple. In fact, the opening range breakout EA, I could put that into the ORB EA version 1 really easily because all it is don't take, oh no, hang on. Oh yeah, no, good. Because all it is doing is the difference between their version of the strategy and my version of the strategy is this candle here, which is the 5-minute ORB, 5-minute opening range. What they do is they literally enter in the direction of that candle. So there's no breakout. They don't wait for a breakout. As soon as that candle closes, we go long. Yeah, we don't wait for a break. The initial stop loss obviously was other end of candle. So what you saw here was an entry there, didn't stop you out, and you're in profit. That's their entry criteria. Simple as you can possibly get. And the simplest strategies are the ones that work. That's the entry. And it's working today. It's not doing anything, but what they're using is an end of day close. So they'll just close out end of day or at 10R. And you're not going to get much of a reward on a candle that size, are you? You're not going to get to 10R. Never going to happen. This candle's too big. But when the candle's small, 10R is actually achievable within a day, within an ADR. But then obviously they decided to change that and use a 5 to 10% of ADR. 5 to 10% of ADR would be 34 in this case, which would have been a stop out today. So that's 10%. So what would have happened today if you were using the 10% of ADR, you'd have gone long with your stop loss there instead of there. So today would have been a stop out. It's interesting. I'll test it all anyway because I've got the EA built. I just need to smash it to pieces again and rebuild bits and pieces that I need to build. Right, I'll leave it there. Anything you need, let me know in the Telegram group. I will be back tomorrow 7:50, same time, and tomorrow afternoon 2:20 for the New York session. We'll trade the ORBs again. I'll let you know how these plan out. That's annoying. I'm also testing the trailing stops on these, so that one works nicely. Look. So I'll analyze all these results later, and we'll see what the results are. As to whether it comes out in profit or loss today. And I'm interested to see if it comes out in profit and loss on each instrument as well, not as an overall portfolio. I think some of these are better than the others. So. All right, so have a good day. Anything you need, let me know in Telegram. Otherwise, back tomorrow, same times as usual, and we will smash the Aussie dollar New Zealand over the head and make sure that comes down tomorrow. All right, so have a good one, and I'll see you guys tomorrow.